Yes, people, it's your boy Bash, back again, new video. This video is just gonna be me back testing, my high IFVG strategy, not my strategy, ICT, high IFVG strategy, you know, yeah. So yeah, let's get into it. Just before we do anything, we're gonna have a checklist. So a checklist is, basically what you want to see just before you take a trade. Let's say you come into the market, you just don't want to take a trade off anything, obviously. You want to see, a liquidity sweep, you know, tap into a, higher time frame bullish PDRA or bearish PDRA, or, maybe hourly order block or 4 hour order block, something like that. Just, you just don't want to come into the market and just take a trade. So in this case, in this scenario, my checklist is going to be previous day sweep or previous day high sweep or section sweep, which is Asia low, Asia high, London lows, London highs. So yeah, those are gonna be the main sweep of liquidity we're gonna use for this video and this strategy. So let's get into it. So like I said, checklist first. So I'm just gonna write out my checklist. Just uh, so one checklist, sweep of liquidity, liquidity. Might be, so in that case, might be previous day high, previous day high, or low, or section, sorry, comma, or section highs and lows. Yeah, so those are gonna be main focus on, the first checklist, and then second checklist is IFVG, you know, IFVG in the opposing direction, in the opposing direction. So yeah, those are just the two checklists you want to see. So basically, you wait for a previous day sweep or previous day high and low. You wait for one side to sweep, and then you wait for a reaction, and then from there you can like pair your entry like IFVGs. I trade IFVG, so I don't really use changing the state, but most time I use it, but not every time because you know if I see a single patch candle to the upside, I might get wicked out or something. So I just don't use changing the state. So yeah, that's gonna be our two checklists. So just on the chart right here, strike it to the left hand side. We're gonna wait for, we're gonna analyze this chart right here, just this section. So right, so we've got Asia. So this indicator, sorry, I'm just gonna introduce you to this indicators. This is called ICT pivot. Yeah, it's called ICT pivot. Something I don't even know what indicator is it. So that's the indicator ICT zones and pivots. TIF, I don't even know how to pronounce it to be honest. So yeah, that's the indicator I use for my previous day high, previous day low, section high. So yeah, if you want to use it, you can just search it up on the indicator stuff. So yeah, so in this case, we have Asia consolidate, London, a little bit of expansion, and then market open right here. Just before we get into market open, let's just see what we go right from Asia. So we got this range, this all range from Asia, right? That's liquidity. So that's built up liquidity from midnight. So again, this is the 3 minutes time frame. These can happen on any time frame, 15 minutes, 2 minutes time frame, 1 minute time frame precisely. If you don't wanna, if you don't wanna rush the process, you wanna take it slow. So yeah. So I'm gonna use the 3 minutes on this, on this scenario. So checklist one is, previous day high or previous day low sweep or section highs or low. So right here, I'm just gonna look at my Asia low, which is right here. So this is Asia low. I'm just gonna make it a little bit so you can see it. That's gonna be our Asia low, and this is gonna be our Asia eyes right. Yep, yep. This is gonna be Asia eyes right. Yeah, that's a bit equal eyes though. So that's gonna be our coming into London. consolidate. We had market open, right? Yeah, daily open. So the indicator is just gonna draw a line for you for the opening price of that same day. So it's gonna draw a line for you, and throughout the whole day, the line is just gonna be there. So we have Asia low, we have Asia high. So we're pretty much just gonna wait till market open, right? So London came as well. So through a London section, we took out Asia low. So that's by the side. That's already been swept. So I probably like how am I gonna say this? So since Asia low has been swept, you don't really want to see, from obviously you're gonna have to wait for market open to see if 9:30 open is gonna sweep London low. So that's just how it works. So we swept Asia low, we got Asia high swept as well. So now all you're gonna have to focus on is London lows, which is right here, one, and the daily the opening price of midnight section as well. That's gonna be a major target as well because price might want to sweep this, this major low right here, which is a key area for price. Price might want to, come down here and sweep this low just before we get any reversal. So we took out Asia low. Obviously, we get a major reaction there, but you don't want to trade London section because you can see what price is, it's just a choppy price action, not the best. So we sweep Asia low. Since we sweep Asia low, now we've got London lows right here. And we've got London highs as well, right? Yeah. So, like I said, Asia low swept. Got a major reaction to the upside. We swept Asia highs. So now we're gonna have to wait for price to sweep London lows and London highs. So during market we write it down, we set London lows. Now you want to see a major reaction. Like I said, the second checklist is gonna be IFVGs, which I did put somewhere, yeah. So IFVGs to the opposite direction. So in this price action, you can see there's no fair value gap there. That's just some wicks, yeah, some random wicks. So you're gonna have to wait for the entry model to present itself. You just don't take trades off. That's why I say I don't use changing the state. Because if I use changing the state, like okay, let's say this is the changing the state. So you're changing the state of delivery, and then I took my entry right here, targeting London eyes. I would get stopped out. So that's why I don't use all the blocks changing the state because it's just too complex. So we got London low swept now, doing pre-market. Market open right somewhere, yeah. Yep, somewhere right, yeah. Market open right. So we came down, we got a manipulation right, yeah. So I'm just gonna draw a little box to it. So we got that manipulation, which is so what a manipulation basically means is, since we swept this low, we got buyers filling in their orders right here. They took it to this high, they took out this high. Now we got a manipulation. So some traders are gonna say, okay, it's gonna come to London highs since we swept this low. So they got manipulated, they got kicked out. Now the real traders are gonna fill in their orders right here to take the price to London highs, which we did. So my entry criteria is once we shoot previous day low, section lows, section highs, you're gonna have to wait for a bearish IFVG or bullish IFVG to get inverse to the opposite direction. It might be a downtrend, it might be an uptrend. In some cases, it might be any case. So we swept London lows. We got the manipulation again. Now this is our entry right here. This is our IFVG. So that is gonna be an entry. So you can see right on this price action, right? Price came up to this bearish IFVG, sorry, bearish fair value gap, and then immediately we reject off it. So we kind of consolidate right here, and then boom, we inverse it. So your entry is gonna be just like this. So your stop is gonna be the candle that forms the IFVG, the candle that inverts the bearish gap. So your stop is gonna be beneath that low. Then now you can target London highs. So you can see that, right? Yeah, that's how it is. So that's a major. That's a IFVG simple, just two checklists. You wait for a previous day high, previous day low to sweep, or you wait for a section high, section low to get swept, and then from there you look for your entry. You wait for a major reaction. Obviously, you want to see price consolidate for a little bit of time before we get a IFVG to the upside, like inversing a fair value gap that's been left on field. So yeah, that's how it works. So same price then rally up from this, from this bearish fair value. After inversing this bearish fair value gap, you put your stop underneath this low, and then you take it to London eyes. Same price action on that day. Price that came up, strip London highs right here. So which I'm gonna mark out as a purple line. Then with that came up, we stripped London eyes right here. Now we're waiting for a reversal. We're waiting for a IFVG entry. So yeah. So on this, I want you to. I'm gonna just take this off real quick. That's just by the way. And then now since we switched, sorry, fucking, fucking wiki accent. Sorry. So since we swept London highs, now you want to wait for a major reaction. So on this price action, we've got just I can't ever see any bullish FVG that was formed. This is not one. There's a little tiny one here, but I'm not going to use that one. So obviously, to me personally, I wouldn't take this, to be honest, because my entry would have been right here and I would have been done for the day. But yeah, that's just by the way. So same process, wait for a sweep of section highs or lows. In this case, we set London highs. Now you want to wait for a major reaction. You want to wait for your entry criteria, which is IFVG to the downside. So if you look on the 1 minute time frame, which we did, obviously there's going to be a fair value gap there. But yeah, that's not the case. We've got one. So we've got this bullish fair value gap right here. It's a little tiny one. Yep. So that's just a little tiny fair value gap there. We inverse it, we close below, and then you can see immediately price run through to the downside. Your entry is just gonna be and you have your stop just personally I risk 10 points on my trades. Any trade I take I risk 10 points. So that's just my risk parameter. I don't really want to risk a lot. So you take your entry there, you risk 20 points, you put your stop on the candle that investor of fair value gap, and then you take it to any lows. You might be this low, might be any lows, you might take passes right here, you might want to hold for previous day low or some yeah, any liquidity. So yeah, that's just it, man. That's how I trade my IFVG model. And we've got a lot of people that trade the same, and then they're more experienced than I do. But yeah, obviously we get to learn every day. I'm always, ready to learn. If you see this video, if I didn't do anything right on this video, you can drop a comment. Oh yeah, you didn't do this, you didn't wait for this, you didn't, I'll add it to my, trading, model or whatever you call it. I'll add it, I'll try to see if I can improve anything. And then yeah, that's just how and on this product right after the sweep of London Eye, you can if you want to trade the ICT 2022 model, so previous sweep of London highs, and yeah, there we go. We have a fair value gap there. It's got field and then immediate reaction. Then you can take your entry there. You just put your short entry there, and then if you want to play safe, you can just have a stop just right on this candle's eye, and then you can tag it, you know, maybe AM low or or London lows again, sorry, or previous day lows, sorry. Yeah, that's just how I trade the IFVG model. Again, if you wanna look for this indicator, you could just that's the name ICT kill zones and pivots. So TFO. That's how I use it. And you can put some setting there. You can change some settings. And yeah, the indicator is just very useful, man. You can use it for a lot of stuff. You have daily open, which is gonna mark up the daily open price for you, and that's a major area as well. You can see we kind of just consolidate, and yeah, I can show you some other examples as well. In some cases we've got previous day low swept. So yeah, on this price action, you can see this is previous day low because this is the whole price range for this day. So we shut previous day low, a little bit of expansion to the downside, manipulation, and then from there we have a IFVG to the upside, and then from here you can take your entry, just risk. If you want to play it safe, you can just you can get in right, yeah. If you get in right, yeah. Sorry, mate. If you get in right, yeah, you can either stop just underneath this low, just maybe 5 points on beneath this low, and then you can target London highs, London previous day high, previous day, or maybe weekly highs. Yeah, IFVG is a strong strong model to trade, and it's basically just simple. You wait for a previous day, you wait for a liquidity sweep, and then you wait for a fair value gap to get invest, and then you take your entry from there. And I'm not trying to make it too complex for me, try to draw some Fibonacci to measure some wicks, and you know, that's just that's too that's way too long. Yeah, that's how I trade, man. Again, if you find this video helpful, if you like the video, please drop a comment, like, and subscribe. Yeah, this is just a back testing video. Hopefully I make one again, and you guys you really love it. So yeah, thanks for watching. See you later.